All right, good morning, ladies and gentlemen, from wherever you're joining. Welcome to another edition of Norrenberger Monthly Financial Market Review, where we talk about happenings around the globe, both from an economic point of view as well as markets. Then beyond that, we also come closer to home, the African market, Nigerian market, as well as also give our own outlook of what is expected in the new month of July. But as we move on, we also have a special guest today who is going to help us deep dive on some matters according to a circular that was released by the CBN a couple of weeks ago in person of Mr. Kazim Aidi. He's the MD CEO of TransCredit. I'll be coming to him at some point later on in the conversation. But as we do every time we come on, Happy New Month for those of us that we have not met. And for those of us who are still probably in traffic in Lagos, we say enjoy the session as we move on. For the content of what we're going to do today, we've already mentioned that global view, domestic economy, domestic markets. We talk about fixed income and equities, then we move into the interview proper. And as we always do, I don't do these alone. I have with me Abigail Additional, who would also be co-hosting this webinar with me. Good morning, Abigail.
Mm. Good morning, Sam.
Yeah, great. You're looking fresh this morning.
Thank you. Thank you very much, Sam. You look great yourself.
Thank you very much. And that's a good opportunity to say, Abigail, please go on.
Okay, thank you, Sam, and good morning, everyone. And to just chip in that this is a very interactive session, I would like you to please drop your questions and answer that you might have as we go ahead, in the chat box. So there's an icon just beneath your screen where you can ask questions. So I'm taking the global bit. The top news, right, that we have in global bit be the US inflation. US inflation, which rose to 4.2% in May 2026. And this is the highest level we've seen, since about April 2023. It used to be 3.8% at the time, and now it rose to 4.2%, right, in line with market expectation. However, this was majorly on the back of energy costs, we jumped from about 17%, higher than 17% to almost 24% in that month, right? And of course, this was at the back of the energy shock, right, that was influenced by the Middle East crisis, the conflict with Iran. Gasoline prices also soared in that period. Compared this to what we have in the previous month, right, like I said earlier, energy prices itself soared, and this accounted for about 60% of the monthly gain or monthly increase in inflation, right? The core inflation itself, the annual core inflation also grew, right, to 2.9%. Also in the US, the US job growth also slowed in June, right? Slowed in June. We added about 57,000 payrolls, right? Way below expectation. Unemployment rate dropped to 4.2%, but this was majorly mostly because a lot of people, a lot of workers in the US, left the workforce, and we had lower hiring, like I already mentioned before. And all of this, right, signals to the fact that the investors, right? Investors are expecting that the Fed would lower interest rate because now we have lower unemployment rate, right? And especially now that we now have energy price, particularly Brent, right, trading lower than 80%. As at this morning, we had the WTI, which is now way below $70 per barrel, and we'll speak to that in details in the next slide. Also, we have the Bank of England, right, lifting its short-term rate by 25 basis points, right? This was during the BOJ meeting that was held in June, where we had about 7-1 vote, right? Majority of the people on board, or the members of the committee, right, voted for that particular rate hike. In the UK, we also had inflation holding steady, right, staying the same as it was in April at 2.8%, and the GDP also behaved in a similar pattern, holding steady at 0.6%, which is of course in line with market expectation or consensus. The ECB, right, held their meeting. They raised the interest rate. There was a rate hike by 25 basis points. Major economies in the euro area, such as France and the like, experience slowdown in their inflation numbers. And it's worthy of note to say that the ECB meeting, right, held before these inflation numbers began to come out, right? We saw the inflation in those major euro economies slowing, and then which has eased rate hike urgencies in those areas as well. We've spoken about the Bank of England, right, increasing their own short-term interest rate. In Iran, right, as we all know, they've begun the funeral processing of their former leader, of the demise of their former leader. They've already begun that. And also the country maintained fragile ceasefire with the US and Iran, US and Israel. And we expect that this would, of course, still influence the prices of global oil prices. Moving into domestic market performance, in the month of June, we saw that moving into the global market performance, we saw that the major world indices, we had a mixed reaction in June, particularly because that was also the month where we saw a huge decline. The US and Iran came into some form of agreement, right, where we had the Brent declining majorly by almost 20% in that month, right? The Brent declined by almost 20%, which gave some green performance, some green light in the global indices. However, we had some major companies, tech and the likes, releasing their results in that month as well, which also affected or gave some of the rates that we're seeing in that regard. So I hand over to Sam for the domestic economy bit.
Thank you very much, Abigail, for that succinct analysis of what is happening in the globe. And just as we've seen globally, there's also been quite a number of things that has happened in the Nigerian market. But before we get around that, let's look at our dashboard as we always do. Inflation grew from 15.69% recorded in April to 15.93% in May. And that suggests about the third consecutive increase in our headline inflation rate. Of course, a huge part of that was driven by rising energy prices as a result of the global war, as mentioned by Abigail, and also a combination of high prices in terms of food as a result of seasonal fluctuations. We also had a slight decline in terms of depreciation in terms of the exchange rate, closing the month at 1,376 at the official market, just about 4 naira difference from where it had closed in the previous month. But then again, external reserves was a significant gain, currently estimated at around 51.51 billion USD as of the end of June, compared to a little over 49 billion recorded by the end of May. For PMI numbers, it was an improvement from the previous month. So in May, it was about 49.6 points. But of course, as much as that was a slight increase, it was still at contractionary levels, of course, still lower than the 50 threshold. For crude oil prices, it was a significant decline from where we were in May, of course, with the fragile ceasefire that Abigail mentioned. Crude oil prices closed at around $73 per barrel. While that is a decline and not so good from a fiscal side, but from an inflationary side, it's a positive, and that's why we have it on the green here. Because as some of us have noticed, fuel prices have now reduced from the 1,300 that we saw at some point in May and June. In some regions, you see petrol prices around 1,002, in some areas 1,190, as the case might be. For the market capitalization, the NASD lost to 2.58 trillion from 2.59 trillion, while for the NGX, it was pretty much in red, shedding almost about 13 to 20 trillion naira, right, closing the month of June at 147 trillion naira. For MPR, it remains the same at 26.5. Of course, we look forward to the next MPC meeting by the end of the month. Oil production improved to 1.53 million barrels per day, of course, slightly higher than the targets that we now set for ourselves. For money supply, it was an increase, significant, over 5 trillion naira, somewhere currently around 129.2 trillion naira, and that's for our M3 money supply. Now moving to some specifics that has happened across the Nigerian market. We start with the pencom industry. The regulatory forbearance on investments in securities issued by parent companies of pension custodians was reviewed, which pretty much extended that forbearance, allowing PFAs to now invest in securities that are now issued by parent companies that have pension custodians. But on the bright side, pension fund assets rose again to a little over 31 trillion naira in the month of May 2026. And again, bright side, PENCOM and the ICPC have also recovered about 3 billion naira in pension arrears from defaulting employers. The Securities and Exchange Commission has admitted 7 fintech firms in its drive to improve technology adoption in the capital market. And I've also proposed a new regulatory framework, of course, in line with this agenda. Again, to move forward from that, the SEC has ordered that people and market players should halt the marketing of Dangote Refinery IPO, stating that, of course, the IPO has not been registered, has not been listed, and has not been, there's no form of formal communication with the SEC in this regard. So, of course, it is criminal to market something that has not pretty much get into with the SEC. The Nigerian Federation Account Allocation Committee distributed a total of 2.3 trillion naira from its May revenue to both federal, state, and local government. For foreign portfolio participation, there is a significant decline by 25.9% in May 2026, and a huge part of that is to look at the contribution that FPI now plays in the Nigerian market. It had fallen to 9.45%, and this is despite the fact that transaction in the market rose somewhere around 1.9 trillion naira in the month of May. Foreign participation has now declined. The S&P has raised Nigeria's 2026 inflation forecast to about 16.9%, and this is not far from expectation, considering that inflation has now moved currently at with energy prices rising and food prices also on the high. It is expected that the annual inflation also will take a leap, and then the S&P has given their forecast to be around 16.9% for the year. Moving to the CBN has ordered banks, fintechs to disclose owners and store payment data in Nigeria. Interestingly, that's one of the conversations that we will be having here today with the CEO of. Also, CBN has revoked licenses of 46 microfinance banks in Nigeria, stating several actions against the regulatory and prudential guidelines that has been stated by the CBN. Again, the CBN has released the draft guideline on ring-fencing operations of closely linked entities in the Nigerian financial system. So for businesses that are group financial businesses in Nigeria that have whereby their parent companies are not necessarily CBN licensed organizations, there seems to be some guidelines around the ring-fencing of activities in that regard. In terms of some macro numbers, trade balance has remained positive in Q1 2026, somewhere around 7.55 trillion, largely driven by significant increase in exports and a decline in imports. Nigeria has attracted about billion in foreign capital, that's capital importation for Q1 2026. Interestingly, which is not so much of a good news, is about 95% of that fund came in as foreign portfolio investment, which means that they are hot monies and could easily find their ways out of the Nigerian economy when things turn. FTSE Russell has halted Nigeria's frontier market upgrade. A couple of months ago, we had the news that they are now reclassifying Nigeria as a frontier market after a couple of years of exclusion. But of course, Russell has now come out again to say they are reassessing that as a result of the transition of Nigeria's capital market to a T+1 settlement cycle, which of course, in their own view, might not be as straightforward, especially for international investors. So of course, that is under review. The NGX also unveils its 2025 media index assessments, which saw the NGX 30 receive some new players, the likes of NASCON and Unilever, while the likes of Oando and Trasco were exiting that index. While the NGX Lotus Islamic Index saw Nestle Nigeria and Cadbury join, while NASCON. To drill down on some other parts of the Nigerian market, that's fixed income, we saw that liquidity still remains quite positive, significant. Treasury bill yields have elevated, of course, in line with some movements that we've also seen, which I'm going to speak to in the next slide. We've seen inflation increased, and of course, the back of that, we're now seeing rates also react towards that direction. And as we'd see in the last few months, last May, June, we've seen yields both in the fixed income bonds and treasury bills now increase compared to where we used to be in May and April. But then again, it's also interesting to look at the yield curve for bond, and we see from our June that yield has improved across board, but a lot more in terms of the short to medium term, medium tenor bonds. Of course, it's still high compared to where we found ourselves in May and April in terms of the long term, but of course. Short term, we're seeing ourselves around the region of 7.5, and at some point, even over 18 towards 19 threshold. Expectations for maturities still high, most of which are automobiles in July and somewhere around 5 trillion naira. But of course, both the CBN and the DMO has released their auction calendar for Q3 2026, and indications are there will be a lot of borrowings, both for bonds and for T-bills. We'll see that maturities for T-bills in July is somewhere over 600 billion naira. But of course, the bank would be offering about 2 trillion naira in T-bills. August 2.1 trillion, September 1.7 trillion, summing to about 5.3 trillion naira. Of course, more than two times how much is maturing. And what that tells us is that there's going to be a lot of borrowing, of course, to meet the huge budget deficit that we have for 2026. And what that would also mean for yields is that yields could improve significantly as there will be a lot more borrowing. But what that could also mean is that in Q4 2026, you might not be seeing as much borrowing as we have seen in Q3. For bonds, July, the lower limit of the expected bond auction is somewhere around 1.4 billion, while for August and September is somewhere around 1.2 billion respectively. For Eurobond yields, slightly higher compared to May. But of course, when you look at the yield curve, we see significant in yields in the short term. At the mid tenor, not so much, but of course, 25-year tenor for Eurobond, we've seen that spike, pretty much a huge movement compared to where we were in the last 2 months. I'll defer to Abigail to speak to the equities market now.
Thank you, Sam, for that very detailed, update on the domestic economy and the fixed income market. In terms of the Nigerian equities market, year to date, we're currently below 50%, and particularly in the month of June, the Nigerian equities market has lost huge amounts of money, with investors losing about over 13 trillion naira, right? And then market in June at over highest decline that we've seen. In the next slide, we'll show you a heat map which shows you the variation over the years, over about 5 years. But since 2023, this is the largest decline that we've seen on a month-on-month basis, right? In the charts that you're seeing below, right? The chart you're seeing below simply shows the stocks, right, that has contributed to that, the stocks that has gained the most, sorry, in the month of June, and the stocks that had lost the most, the worst performing in the month of June. And if you'd see the chart that we have at your top right, you'd see that all the indices, major sectoral indices lost in the month of June compared to their mostly positive performance, broadly positive performance that we had in the month of May, right? And the top of that would be the industrial sector, which has lost about 17% in the month of June, followed by the oil and gas sector, which has lost about 15% in the month of June. Which has lost 15% in the month of June. It shows a heat map of the next slide, which shows heat map of all of the monthly performance that I was speaking to earlier, which also speaks to 8.37% month of June, highest we've recorded on a month-on-month basis since 2023. And this came after back-to-back profit, back-to-back huge gains that we've seen so far in the month of January. Since January in 2026. In 2026, about in May, right, we had the market, surpassing the 160 threshold. In March, we also had the market surpassing the 150 threshold. But now we are at 160 trillion, right? All of those figures are in trillion. Right now, we're about below 150 trillion threshold right now. And that could be, you can trace that to huge profit taking in large cap stocks. And also we had companies, paying dividend. We have markets also, tweaking or tweaking their settlement to the T+1 settlement, which was a bit of a turn-off to some international investors. Right. Also, the month of July, we're expecting some companies, right, to pay dividend. Companies like Aradel, we have Aradel. We're expecting Boa Foods, right, to pay about 28 naira per share. We're also expecting 15 Healthcare to pay some dividend in the month of July. Also, e-Transact as well. We're expecting those companies to pay dividend. A key update that is worthy of note to be the preparation for Dangote Refineries listing on the exchange, right? That is a key, is worthy of note, and you recall that in a few months back, we had the pencom industry, releasing regulation allowing PFAs to participate in the IPO, right? And we expect that this will be a huge one for the market, of course, pushing up the market cap and also pushing market performance when that happens. We also, our consolidated, in terms of our consolidated portfolio watch, right, we have our Norrenberger Corporate Sustainability Index that we've been, tracking since the beginning of this year, which as at the end of June 2026 is currently doing about 36%, right? 36.8% are different stock as well, 32%. All of our portfolios are currently doing well, just slightly above the ASI, slightly below the ASI, sorry, but still doing way better, doing well, and none of them are in the negative. I know we can attribute this to what about earlier. The market is currently on a correction move. Also, in the next slide, you see the major corporate action that was witnessed in the month of June. We have worthy of note to be, I'll start from the earliest one, the one that came out first, which would be the Lafarge, changing their corporate name to Nigeria PLC. And we also had MTNN, right, receiving an upgraded rating from Augusto and Co., an upgraded rating to AA. UBA also, they're supposed to hold their AGM very soon, and in that notice, they give an hint about the possibility of declaring dividend. Declaration of interim dividend is one of the key things that will be spoken about at the AGM. So that's an in red size declared dividend of about 45 kobo for the year ended March 2026. We also had HDL Real Estate, which is an affiliate of Honeywell Group, purchasing about over 14% shareholding in Ikeja Hotels as well. Also, we have Airtel Africa, right, which initiated a share buyback from Barclays Capital Securities, and bought back about 1.58 million shares. So, like we said earlier, you can ask your questions in respect to the happenings in the month of June, sorry, or what do you expect that the market will perform across both global and domestic markets in the month of July. I'll hand over to Sam now as we welcome Managing Director for TransCredit.
All right, thank you very much, Abigail, for walking us through the equities market. It has really been an interesting one. Of course, we have our guests today, and now we move into the interview proper. And just as Abigail has said, for any one of us that have questions, you can go ahead and put them in the Q&A session. We're already seeing some of those questions coming in as we speak. But of course, we have our guest for today and the MD and CEO of TransCredit. Just to give a bit of context around TransCredit, TransCredit is a CBN authorized, licensed, and regulated financial service provider with core competencies in credit processing, fund management, and payment system. I would like to welcome Kazim Aidi, MD CEO TransCredit. Good morning, Kazim.
Good morning, Samuel.
It's great having you join us this morning.
Thank you. Thank you for the invite. It's a pleasure.
So, yeah, what we'll be talking about today, I'm sure you are quite familiar with it, right? A couple of weeks now, the CBN came up with guidelines around payment system. And I know the CBN quite very active when it comes to releasing guidelines, of course, to protect both the public and beyond the public, also protecting the Nigerian system. And that is one of the conversations that we would like to have today, because again, people need to understand what this means, how this impacts players, and could this also mean competition? Could this mean improved innovation? Could this also mean that a lot more Nigerians will now scrutiny? And we believe that your expert view on this will help average Nigerians and everyone out there to have a deep understanding of what these guidelines are all about. And I'll just try to give a short overview of what that disclosure is. On the 15th of June, 2026, the CBN released the circular to deposit money banks, MFBs, MMOs, and payment terminal solution providers. And just to read a bit of them, so it states that all deposit money banks, payment service providers, and other financial institutions with digital payments footprints shall disclose the ultimate beneficial ownership of significant shareholders in accordance with applicable extant laws and regulations, including anti-money laundering, combating the financing of terrorism, and counter proliferation financing regulations. Institutions shall maintain accurate and up-to-date UBO records and make such information available to the CBN upon request. It also stated that all financial institutions and participants facilitating payments within Nigeria shall ensure that payments transaction data generated within Nigeria are stored and managed in Nigeria in accordance with data protection laws and regulations applicable in Nigeria. Accordingly, all affected financial institutions shall fully comply with this requirement effective January 1, 2027. Also says market structure requirements for the purpose of this circular, the definitions of consumer issuing and merchant acquiring activities shall be as ascribed in the extant guidelines on the operations of electronic payment channels in Nigeria. All licensed financial institutions engaged in consumer issuing activities, whether individually or part of a group of related entities, shall hold more than 25% market share in consumer issuing within any rolling 12-month period, shall not hold more than 15% market share in merchant acquiring activities during the same period. Any licensed financial institution engaged in merchant acquiring activities, whether individually or as part of group of related entities, shall hold holds more than 25% market share in merchant acquiring activities within any rolling 12-month period shall not hold more than 25% market share in consumer issuing activities during the same period. Pretty much vice versa, right? All regulated entities shall submit monthly market share returns in accordance with prescribed templates and timelines. All affected financial institutions are required to take necessary measures to achieve full compliance not later than December 31st, 2026. Now, I've said a lot of things, Kazim. Can you help us explain these developments as well as its possible implications for customers and players in the industry?
Thank you, Samuel, for the invite once again, and thank you for this request. Actually, this regulation is actually long overdue. It's something that we are supposed to have been done. They're supposed to have been done within the financial sector a long time ago. And in simple terms, if I'm to define it so that the layman will understand, the mandatory data localization is strictly saying that all payment transaction data generated in Nigeria must be in Nigeria, meaning that most of the data storage in Nigeria is stored on cloud, and most of these clouds are not hosted in Nigeria. Most of them are hosted in Europe, they are hosted in US. Now, if CBN or any of the regulatory agencies want information, they still need to go through the countries where those data are actually hosted. This is not good for the country. This is not beneficial for the country. But with this now, it means that a lot of investments have to go into infrastructure, IT infrastructure development in Nigeria. And most of these data must be hosted. What are these data? We are talking of ATM transactions. We are talking of mobile application, mobile transaction, even purchase online. As long as it's done in Nigeria, the information has to stay in Nigeria. The ultimate beneficial ownership disclosure. This is very, very key. You find a situation whereby a particular promoter owns 20 companies in Nigeria, but none of his name is in the shareholding structure of those. You just see that company A is owned by company B, company B is owned by company C. Company C is owned by who? Mr. X. So now, who is the Mr. X? CBN, the Central Bank of Nigeria, is saying they want to know the real that is behind every company, every financial institution in Nigeria. This will not only bring transparency in the system, it will help us. It will help us to be confident in doing business with the financial institutions. For the market dominance, it's strictly saying that if you are an issuer means, let's take for example Clepe. Clepe issues ATM cards. Clepe becomes the issuer bank. And on the matter, the POS providers, let's use MoneyPoint, Paystack as the as merchant bank. What CBN is saying is that you cannot be the dominant party in ATM issuance, at the same time be the dominant party in merchant issuance. This is not good for the system. It can monopolize the system. CBN is looking for a way of making competition available and making pricing very, 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 very high in the system. The impact is very straightforward. We are going to have a stronger regulation of the fintechs now, increase transparency and anti-money laundering compliances, and reduce monopoly risk in the data system. Thank you, Sama.
Thank you, sir. I do agree with you that this upgrade is long overdue. I mean, Nigeria's payment ecosystem, right, is one of the. I know that you've already answered this, right, while you were answering the first question. However, I'd still like to ask directly, and I'm sure that there are a number of persons that are curious here that probably also work in the payment space. Do you think this new requirement, right? Do you think this new requirement is a constraint on innovation? Is it even necessary, right, for the next phase that this?
It's not actually a constraint at all. Not a constraint. The only thing that people or investors might be looking at is that it will require them to bring more investment to the system in order to improve the infrastructure, the IT infrastructure in Nigeria. It's not a constraint at all. It's a positive development for the country. And in terms of implication directly to the customers, we are looking at enhanced data security. At least customers' data will be highly enhanced and highly secured. And we're also looking at competitive pricing. There will be more competition in the system, and customer will now pay lesser than paying more. So it's not a constraint at all. It's a positive development for the country. Thank you.
Yes, definitely a positive development. It can be a bit, there can be a restraint, right, in adopting them, but it's definitely positive development and to do us all good, right? So the most notable provision, right, in the restriction, right, preventing institutions with more than 25% market share in one payment system, right, from exceeding 50% in another payment system. How do you expect this restriction? How do you expect this to reshape competitions among, banks, fintechs, and different payment service providers?
Technically, if you look at it very well, it's getting to a stage that even the big players are no longer playing in those sectors again. So with this development, you now see smaller organizations, average organizations coming on board in building their infrastructure more, and the issuer side and the merchant side. Issuer affect more of the customers directly. You now see that there will be more players. It won't be a particular set of firms that are dominating the segment. It will be all inclusive. And once it's all inclusive, it will be safe for the system. We don't want a situation whereby we don't want a major player that owns the issuer also owns the merchant. If such a player's network is down, meaning that the whole country will have problem. The whole country will be down. So we don't want that situation to occur at all. And we don't want a situation whereby we'll be at the mercy. We'll be at the mercy of a particular firm. We want everybody to have his own share in the market. So
Thank you so much, sir. I'd like to say to the audience again that if you have questions, you can please drop them in the Q&A session. We can already see that some questions have been dropped there, and we'll answer that as we go on. in the course of for sticking with us. Also, sir, one of the things that this circular states is a requirement that all payment transaction data generated in Nigeria must be and managed locally by January 2027. And this is a major shift, right? So what are the
Yes.
opportunities? What opportunities and maybe operational challenges do you think that banks, fintechs, service providers generally would face in implementing this particular storage requirement?
Lots of opportunities. It's in terms of opportunity to create more job creation, there will be more job creations in the economy, and that is massive. That will bring a lot of people from the unemployment status to the employment industry. You discover that to most firms see it as going to bring in more, inject more capital into the system. So they might see it as a constraint or a challenge, but I don't feel that's a challenge because in the long run, it's going to be positive to them. So it's a win-win for the companies and also for the consumers. Even the merchants at the end of the day, they will be able to get it at a fee very, very, very affordable. So it's a win-win for all.
I agree with you for all of us. Another thing that this circular mentioned, right, or noted, right, it strengthens disclosure requirements, around ultimate beneficial ownership. So building beyond this regulatory compliance, how do you think how important do you think this ownership transparency is in building trust within the Nigerian financial system? And will it
when your country's financial institution is clean, when your country's financial institution is very transparent, foreign direct investments will be very high. People they want to invest in that country. And we've been hearing on money laundering, money laundering, money laundering, money laundering. This will drastically reduce. We are saying that we want to know who controls that company. We want to know who appoints the management of that company. We want to know who has the voting power of that companies. So in each of the companies, the financial companies we have in Nigeria, we want to know the major promoters of those companies. And once this is transparent, it's a long way to a positive signal to the international community and even to local investors that want to invest. And we don't want a situation whereby there are so many. I remember there was a company, MMM, because we don't even know who were behind those companies. They defrauded a lot of people, went away with people's money. It became a problem. But if we're able to have identified the major promoters behind those companies, all those things that happened will not have happened. So it's I think is a good thing in the right direction for Nigerian financial system, and for everyone. I think it's a good one. The thing is that the only restraint we might be seeing is that there might be a lot of resistance from the major promoters of those companies that they should not disclose their names. That might just be the little constraint, but with the proper regulations in the country, I don't believe Nigeria will not be able to achieve it. I believe it's achievable. Thank you.
absolutely think I must comment actually that you have actually done justice to this topic. I'm sure that for our audience or anybody on the call, that when we were reading what the circular is about, they probably found it strange. I'm sure they now have a bit of understanding, right? An idea about how that relates to a layman, how it relates to different payment services in the Nigerian financial system as a whole. Thank you very much. So I'd like to ask on this circular issue, before we go to one more question and then a question in the Q&A session. In overall, right, how can regulators, right, in Nigeria strike the right balance between encouraging innovation and preventing excessive market dominance?
With I think this question might not really be necessary because of the new regulations that CBN did. If you look at the regulation very well, if you look at the new regulation in details, you discover that the the market dominance, they are saying, CBN is saying that a firm cannot dominate multiple segments. It's saying issuing versus the acquiring beyond a certain threshold. We are looking at a possibility of ClearPay already having 25%, more than 25% in the issuer sector, in the issuer system. We are saying that they cannot do more than 15% acquirer in the acquiring sector, which is POS and Co. Technically, if you are already in the system and you already are maybe probably around 30-40%, it means that you have to reduce the other segments that you are already dominating. Or we don't want the system don't want a situation whereby one or two people will continue to discover that a lot of banks or a lot of payment system, they have decided that, okay, because this area or this sector is already full, is already filled up, they can now come in, because those ones that are already dominating, we have to start dominance. We have to start reducing. And within 1 or 2 years, you discover that it will be food for all. It will no longer be food for a particular sector. So I think the market dominance limits, and with the regular updates that CBN will be requesting for banks and other financial institutions to be provided, I think people will have to comply. They will comply with it, and dominance will drop significantly. Thank you.
Thank you. Right. Before I get to the last question, I'd like to say that, like we always say, Norrenberger is a 360 financial service provider, and TransCredit is one of those subsidiary. And now I guess here is the MD of TransCredit. TransCredit is a CBN authorized and also licensed financial service provider. They're for your credit lending or your credit solutions. All right. So I'd like to ask the last question. TransCredit operates in a space where customers expect, fast-paced access to credit. I want a loan to boost my business or to buy a car or whatnot, and I want it as soon as possible. Yet there are regulatory expectations. Regulatory expectations continue to grow. How do you ensure that the business remains compliant to this regulatory requirement without compromising customer experience?
Thank you. TransCredit is a company that we highly compliant with the regulatory requirements, and at this make sure that our turnaround time for facilities is very optimized. We don't want a situation whereby we have a customer that complains, because if one customer complains, a lot of referrals will stop. So at TransCredit Finance Company, we can assure you that any type of lending that you apply with us, within a specific time frame, usually, all things being equal, once the customer has been able to complete his documentation, approval process is usually 72 hours within TransCredit. And we can assure in TransCredit, technology, we leverage on technology highly. So turnaround time for transaction, it's the thing that we don't joke with in TransCredit. Thank you.
All right, thank you very much, Kazim ID. It's been an interesting conversation. Just as we had said, for those of our audience who have questions, can of course make use of the Q&A section of Zoom to ask their questions. But we already have some questions for you, Kazim. Now, I'd just like to read through some of them. We have a question from Kolade Awosomi. He said he would like to ask if the CBN is mindful of data breaches when these data are stored in Nigeria, knowing what we know about how we manage information and data generally. I would like you to chime in on that.
It's a lovely question. I understand where the person is coming from, but data hosting is a game entirely. And once the data is hosted, once the infrastructure is right, we have securities around these things, and this security is not, this data is not what just anybody can access. It's not what a government official can just say, I want and he gets. No, there are regulatory requirements also accessing those data. So our data is safe with this new development. Our data is safe in Nigeria. Nigeria is not we used to think it is. It is highly regulated now, and I can assure you, our data is safe if it's localized in Nigeria. Thank you.
Yeah, interesting response there, Kazim, because it's that, of course, before you can even host a data center in Nigeria, there are, of course, there are some standard procedures or standards that you need to meet
Exactly.
to be able to host your data. And I think it's quite interesting. What it does, again, is that it gives local players opportunity to also set up businesses in that area. For the foreign guys that we pay huge top dollars abroad to host our data, with them, of course, it means that if they would like to play in the Nigerian market, of course, they can bring that in, set up their data centers here in Nigeria, use our resources here, employ our staff. So, of course, what that means is that it's foreign direct investment for us, and that can drive economic activities also in here. So, yes, I see some sense in there, but of course, implementation is always one thing that we tend to worry about, and we'll hope to get there someday very soon. Another question from an anonymous attendee saying that is the time frame provided by the CBN enough to set up industry standard infrastructure to host financial data within the country? Right now we're in July. The deadline is somewhere around the 1st of January. So that's about 6 months thereabout for full compliance. What do you think, Kazim?
Actually, it's more than enough, actually. It's more than enough. The regulation did not say that every organization should set up its own infrastructure. I only say these data must be localized. And there are some companies that are already established in Nigeria. Company like One that already have this infrastructure. You can meet with them, access them. You can get the services from all these companies that already have the infrastructure. And in no time, I also believe Norrenberger will also be one of the people providing the service to these financial institutions going forward. So a company doesn't necessarily have to host it itself, people to host its data in Nigeria. Thank you.
Interesting response there, Kazim, because we have another anonymous person that has said that we do have sufficient data centers to cater. And I just wanted to give some stats. We actually have about 20 operational data centers in Nigeria, hosting an estimated capacity of about 136 megawatts. So you have the likes of Rack Center, Equinax, you mentioned they one, and those are the owners. We have Africa data centers. MTN also has Digital Realty, that's Medallion Communications also have. We have Galaxy Backbone Limited. So quite a number, especially in Lagos, Abuja, Kano, and some other states like Rivers. So yes, to respond to that, I think to a large extent, Kazim has also mentioned that we have quite a number of these data centers that can help host information here in Nigeria. Another question from an anonymous attendee saying, can these fintech comply with new regulatory requirements? What could be the possible implications for payments collection and merchant transactions processing?
They don't have a choice. Everybody has to comply. It's something that we don't have a choice. Something we must do. Regulation is regulation. If you want to practice in Nigeria, you have to follow suit, or your license is seized. So we have to. There's no choice about that.
Yeah, interesting. Of course, regulation, the players just have no choice but to follow, except unless so I'm sure they'll find a way. What I think we might find, which you had already alluded when you were responding, was that many of these guys in the payment system will now have to reassess their business model, now pay more attention. And I think it's going to be interesting because what you find is that you now see specialization rather than having businesses having dominion over different areas of the business.
Exactly.
They can specialize on one, and then you also eliminate risk of losses on both ends when a single business hosts payment side, host the merchant side. And of course, when they have downturn, it means that there's a problem across both, and of course, specialization. And again, I think it also gives room for smaller players to also have a play in some of these areas of the business. We have from Adamu Mailafia, who says the CBN Circular states 25% of consumer issuing services and 15% of acquiring merchants. Will this policy affect the likes of MoneyPoint, OP, and others since they have penetrated competition in the fintech space?
Yes, it will definitely affect the likes of Moneypoint, Opay, and other. If they have actually they actually caused the border of 25%, 25, 15% threshold, they will need to reduce one to play in one, or they leave one for one. It will definitely affect them.
Yeah, of course, they now have to start right sizing
Exactly.
in cases where it's necessary. Chimumba Eze says, how do we ensure geographic diversity in data redundancy with new regulation? That's an interesting question. But let's hear from you, Kazim. How do we ensure geographic diversity in data redundancy with this new regulation?
Well, diversity is not even the issue for now. It's for us to even have the infrastructure to host our data here. So for redundancy, I'm sure that's even will come in play within the next within the first year or second year. Going forward, redundancy should not be a problem. I don't think we are going to this. And being geographically, myself and everybody knows that in Africa, Nigeria, Lagos is the hub of business. So geographically might not be come in play for this at all.
Yeah, just like we mentioned, the data centers are mostly centered around
Exactly.
Lagos, Abuja, Port Harcourt, and Kano. You'd also see that the fintechs, if you take away the likes of Lagos, would most likely find themselves around Port Harcourt, Kano,
Exactly.
and Abuja. So of course, redundancy might not necessarily be a question in the short term. And we are already in the era of data intelligence, right? Business intelligence, which I feel hosting this data here also gives these data centers, fintechs, of course, for information that might be disclosed, a lot more ammunition to now start creating products that meet the Nigerian populace. So I think it's quite interesting, just as you have also mentioned, Kazim. We have a comment from an anonymous attendee. He says, I appreciate what the regulatory body is doing in terms of regulating movement of funds. However, when it comes to certain technology that will be able to detect a Ponzi scheme of transactions and be able to stop a lot, put a red light to those transactions, we're going to curtail the high rate of financial crime in the society. Example of MMM, MDA Forest, and whatnot. And what this person is just pretty much saying is that we need to get to a point where we now have airtight security system that is to detect Ponzi scheme transactions in a bid to, of course, improve the security system around data and the fintech system. Interesting comments there, anonymous attendee. We have a comment from the chat. I'd like to also go there and read what we are. So redundancy in competing speaks to having adequate backup to ensure uninterrupted service delivery. So we have a response from Pabina Yinkere. He's trying to also respond to that question around geographic diversity in data redundancy. And he's saying that in competing, he's speaking to having adequate backup to ensure uninterrupted service delivery. And I think that's also a noteworthy question in Nigeria, especially an environment that has issues around internet, power, and a host of other. I think these data centers have also been quite innovative with them. They pretty much are off grid most times. Using things like their solar panels and other forms of renewable energy. So we might find that. The questions are trooping in. We wanted to end this by 10, but it's looking like Kazim, you're giving us a joyride here. Another anonymous attendee is saying, can data be hosted in multiple jurisdictions, such like outside Nigeria and in Nigeria? I think
The data must be hosted in Nigeria. Then you can have your backup outside Nigeria, possibly that's your choice. But the physical data infrastructure must be in Nigeria. That is what we are saying.
so. Yeah, that's a response for you there. I think the last question that we not responded to, and that was because it is more of a market question, not the CBN guideline. The anonymous attendee is saying, how long do you expect the market correction to last? And we had shown a slide of how the markets had performed in the last, well, I say the last 4.5 years. Maybe I'll have to put that up again so that we just we are able to see it. 10 seconds, please. All right, so the chart or the table tries to look at monthly performance of the NGX in the last 4 years, and a notable view from the reform year, so from 2023 to 2025, we've seen that in the last 3 years, the market has largely been positive, except for 2024 when it was quite marginal growth of 0.76%. Now, the only time in the last 4 years where the market had been in the red is been 2022, where the market lost in June, July, August, September, October, before a recovery in November and December. Now, our view for this year, 2026, is that the market will experience some corrections over till about August. And that's why we said considerations. We have expected dividend payments still in July. And of course, when dividends are paid or close periods are being passed, you start seeing some investors trying to take profit and also rebalance their portfolio. We're expecting a number of rebalances still going on up until July and at some point in August. But of course, the expected Dangote refinery in September, we expect that conversation to drive market rally also. So that means at some point in August, September, we start seeing a number of people come back into the market, because again, many of those prices would have slowed down, which are good entry points for investors. So at some point in August, or running through September and towards the end of the year, we expect that the market will now take a green shape, and then the color of this table might look a lot more different compared to what we had seen in June. So for July, we might expect some level of profit taking. Again, profit taking times or bearish periods are also good times for you to enter with good positioning. So having said that, I think it is a good point. Abigail, you'd agree with me that this is a good point to say thank you to our audience for joining us for this conversation today. It's been a tremendous 1 hour having to discuss with Kazim, also the MD and CEO of TransCredit. Thank you very much, Kazim, for joining us for this conversation.
Thank you,
Abigail. Abigail, would you agree that this has been quite an engaging conversation? I think this has to be one of the most engaging in recent months, Abigail.
Yes, I totally agree, especially because we had questions and chats and lots of interactions going on in the chat box. And like I said earlier, Kazim, you did justice to the topic, right? And I'm sure that's why we had a lot of engagement there. Thank you very much.
Thank you very much again, Abigail, for doing this with me. Until next month, again, when we come with our financial market review. I will also have another executive come here to help us dissect and then do some deep dives on matters that affect our money, because at the end of the day, it is important to keep a close watch at anything that can impact your money. Up until then, thank you very much. Thank you very much, Norrenberger Research, the team that helped us to put this together. Thank you very much, Norrenberger, as a group. We thank you also for helping us host this wonderful webinar. To our audience, until next month, have a happy new month. Bye-bye.